Welcome to TheoTrade. This is Don Kaufman. It's April 28th, 2023. Just about an hour after the cash close here on this Friday afternoon. S&P is finishing the week higher and seeing a really nice expansion, if you will, of some two-sided trade. Nice expansion, of course, also of what we term realized volatility, which is exactly one of the things we are going to discuss, of course, on this weekend's update. Look, market volatility expands and continues to expand before the FOMC meeting, but I have to tell you, the FOMC meeting, that is not all that's on my mind. There is a ton coming out in this next week of trade. And one of the things I'm just going to hit right off the bat is that the S&Ps are only anticipating about $72 of movement. And again, I'm going to show you in the chart here in just a moment, but I want you to be thinking about that throughout the course of this discussion here on this weekend update, because again, S&Ps expecting like a $72 move throughout the course of the entire next week of trade. And yet that's the kind of activity that we've seen. What? I mean, you saw that on Wednesday of this past week. You saw it on Thursday. I mean, the marketplace is it's angry. It's moving right now. Let's get into it with a start, okay, to feel out some of the levels that are presently in the S&Ps. What you're looking at right now on your screen is none other than kind of is like my favorite chart of April, if you will, of 2023. It's going to be a nice goodbye to April of 2023, because I'll tell you what, incredibly range bound. The chart that you're looking at right now is the S&P futures. It's the 30-day 1 hour. And if you take a look at what has transpired in the entire month of April, what do we have over here? Oh, roughly speaking, 4,100 to basically 4,200. Almost an entire month inside of a 100 handle range. And of course, that's probably why you'd look at it and think, yeah, sure, we'll only move $72, of course, all of next week. But again, we're starting to see those ranges expand towards the end of this week. And let's get really into detail, because I'll tell you what, we're coming right to the upper edge of this range. In fact, I'm even going to zoom in on it. For those of you that are not into some of the levels that we've discussed lately, this level to the upside, where my mouse is on, is 42.11. The downside, okay, 41.06. Let me tell you something. 41.06 held tremendous weight. We had a big reactionary low here, also right and around that 40.70 level. Okay, and again, with the levels that I'm actually bringing up here, they're critical at this point, because obviously we're coming really close to the 42.11, and that's a box, if you will, that we just haven't checked in a long time. Now, the levels that are on your screen, this 42.11 down below the 41.06, those are what we actually term gravity points. They're points to which the marketplace is drawn to. Those are levels that I actually kind of, differentiate from really a lot of different trade that you've seen over the last couple of months. But 42.11 has held weight now for a considerable period of time. Look, I'm going to open a 180-day 4 hour. Again, 180-day 4 hour. And you will see that 42.11, okay, going back even more than 6 months. In fact, let's just do it. Let's do it. We're going to open up even a 3-year chart in this particular case, that 42.11 being a critical and kind of central point of trade. As I said a moment ago, like, we just haven't, if you will, checked the box. When I say check the box, we haven't actually hit 42.11. We came extraordinarily close to doing so right back here in February with one of the bid backs to the marketplace. We came extremely close to hitting the 42.11 right back here in December, but we haven't actually checked that box since all the way like last summer. And I'm going to tell you right now, it's a hop, skip, and a jump away. I think at this particular point in time, I think you have to expect, unless something spectacular happens over the weekend, I think you have to actually expect us hitting the 42.11. Now, why is that a pivotal level? It's not. It's pivotal to the point where we're just going to grab onto it and we're going to kind of ebb and flow around the 42.11. What would be pivotal, though, at this point in time would be a breach above 42.11. Above 42.11 Okay, we're out in like, no person's land, and the marketplace would be in the midst of a much more significant, if you will, squeeze to the upside. Now, speaking of a squeeze to the upside, one of the things that I also want to make very apparent, you know, I am not here to kind of assign, if you will, like, oh, what's the probability of going to 4211? It's really, really high. But the fact that we're at the upper edge of this range, which again is the 4211, versus the lower edge of the range, which is 4106, makes no difference to me at this particular point in time, because I can also make the exact argument that, look, you hit 4211, you kind of check that box, and we rip right back down to 4106. That's reasonable. I mean, look, 24 hours ago, you would have told me there's no way we're going to hit 4211. There's no way. That's 24 hours ago. And 24 hours ago, we were actually ready to breach to the downside. I mean, things actually got a little bit scary at that 4070 handle in markets. Nevertheless, we reverted right back up to the 4106, exploded higher off of it. And again, throughout the course of the week, there was some pretty spectacular tech earnings. And one of the things I talked about in Wednesday night's video was this just incredible bifurcation that continues to resonate in the marketplace. And the bifurcation, of course, is you can look at certain sectors over there, like the financials, which on a year-to-date basis, okay, they had a big rally today, but they're still dragging well behind. Okay, but it's all about technology at this point. The QQQ now up about 22% on a year-to-date basis, after getting clobbered, of course, last year. But this is trade, though, that can be extraordinarily difficult, because at this particular point in time, a lot of investors, a lot of traders alike, they're trying to decipher, okay, is this the beginning? Right now, is this the beginning of something that could substantiate a more significant rally? Are we going into a recession? I mean, I got to tell you right now, the rally that we've seen since the beginning of the year in the QQQ, it really is one of the most hated rallies I've seen in years. I mean, it really is one of the most hated rallies. But I can also very easily make the argument is, look, and I did this a couple of weeks back where I was talking about, what's the difference between the rally right now and the rally right here and the rally right here, and okay, and this particular rally. Look, they were all met by wild, okay, sell side activity. And one of the things that, as a trader and investor, okay, you need to be looking out in the future right now. And look, it's not that I am anti-rally, okay? In fact, I even placed a number of bullish trades, not anti-rally. I just don't see any difference right now in terms of structural changes, the economic situation. Look, I'm not talking to traders right now. I'm actually talking to investors and people that are like, I really should have bought NVIDIA at the beginning of the year. Why? Because it's up, some almost 100%. Okay, just wait. I mean, look, this marketplace, these are dangerous times when people get caught up in squeezes. It's a squeeze, then it turns into a rip your face off rally. People feel like, that fear of missing out, the FOMO, and they get slammed right back down with the remainder of the marketplace. Okay, it's nothing to do with NVIDIA. It's nothing to do. I don't have anything against NVIDIA. Okay, Apple, who cares? It's got earnings this next week. Yada yada yada. It's not going to make a difference to me. Can you believe though that Apple is almost back to all-time highs over here? It's pretty spectacular moves. But again, it's just the bear in me. It's not about being bullish or bearish at this point. You just got to be smart in terms of trading. At this point in time, we're towards the upper edge of the range. Okay, and towards the upper edge of the range, I'm much more likely to be selling out of the money calls. Like, I'm not even so inclined to want to take big directional positions. I am, in fact, taking some directional positions using the Catapult strategy, which I'll mention. But I'm not even about that. I'm much more about right now trying to sell some premium. And we are afforded a pretty good opportunity if we start hitting this 4211 to sell out of the money call premium. Okay, it's not a half bad time. We've just had, again, a rip and move the last two trading sessions. So keep these levels in mind. Again, the 4106 and the 4211, breaking above that 4211. When I say breaking above it, I mean any significance above the 4211, okay, we could have a straight shot easily to 4300 in the S&Ps. And again, I do not want to diminish that probability of a more extensive move, if you will, to the upside. So range bound in the S&Ps, but I wanted to give you the levels to watch. The next thing I wanted to discuss here is, a lot of people, they look at VIX. And of course, I entitled this this weekend's update, Market Volatility Expands. before the FOMC meeting. And I did not per se denote though what type of volatility. And I'm just going to tell you right now, VIX is all the way back down in the 15 handle. Things are getting crazy. But at the same time, like look at the moves this week. And one of the things that's pretty astounding, and again, I'm going to look at the S&Ps and zoom in over here. One thing that's astounding throughout the course of this week, you do realize you had, 3 out of 4 trading sessions that were big. In fact, I'll even go ahead and say like Wednesday's trading session was big because we had a kind of a key reversal and a rip back up over there, but it got scary. Earlier this week, it looked like we were just coming off with absolutely no end in sight. We reversed, ripped, of course, on some earnings announcements, but there's an expansion. There's no question about it. A heavy expansion on daily expected moves. So that basically implies that, of course, the moves that we're seeing right now are no longer compressed. We're getting ready to make a much more substantiated move in the markets without looking, okay? And by the way, we can absolutely look at historical volatility, the annualized standard deviation of past stock price movement. You don't need to in this case. I mean, it's pretty, easy to see, like big candle. It's enough for me. The other thing that's in big time contrast, take a look here at the advanced decline line. Okay, the advanced decline line, you realize we're starting to actually see some higher degrees of correlation. That is, the market's actually moving, okay, as much more of a unit. And when the market starts to do that, for instance, 80, 90 stocks moving in one direction, it means we're ready to actually break the range. Okay. This is the time, though, that I'm going to reiterate another point once again. Just because you see the S&Ps are up in the last, 24, 48 hours. Look, we could absolutely tag this 42.11. Shorts get squeezed. We come a little bit of it, above it, and then we rip right back to the downside. Again, there are points in time as a trader where I'm really directionally biased. And there's points in time like right now that, you just have to succumb to the idea, all right, that this marketplace is just going to be like chocolate covered hand grenades this entire next week. And everybody wants to hear, you show me the Fibonacci that's going to tell me, okay, and show me the chart. Look, you got nothing but levels to latch onto. And I can't stress this enough because, this next week, and let me make the point right now, you have the Fed coming out. Obviously, everybody's talking about Fed, yada, yada, yada. Who cares? Like, people are going to be talking about this to the blue in the face throughout the course of this week. Look, they're going to bump. Okay, that's it. They're going to bump them by 25 basis points. And if they don't, okay, it could cause a little bit of panic if they don't raise rates. Like, the marketplace has expectations. Do you have expectations? The marketplace has expectations. The marketplace is placing an 80% probability on, of course, a 25 basis point hike. But you know what? Put that aside for a second. There's a lot more stuff. There's ADP unemployment. There's the job jolts coming out. Okay, it just goes on and on and on. There's some factory orders coming out. Wait, there's ECB. ECB is on Thursday. Oh, the European Central Bank. Christine Lagarde has something to say. And then, of course, on Friday, you get the employment situation. There's nothing like icing a cake with an employment situation. Oh, wait, did I forget to mention Apple? Yeah, Apple also has earnings, of course, throughout the course of the week. Look, we're, how do I say this? Again, it's chocolate covered hand grenades throughout the course of the week. And when you start thinking about like, I definitely think we're going higher or lower, okay, don't put yourself in that position this next week, right? Just don't put yourself. All right. So we've given you the levels. We actually recognize that markets are moving more as a unit. So it's highly likely we're going to break, okay, this horrendous 100-point range in the next week of trade. Highly likely that we're going to see that. Okay, the next thing over there, again, the Fed, the jobs, the ECB, Apple, oh my! And of course, Skew is a rockin'. If you guys haven't seen this, if you're not into Skew, it's fine. I'm not going to spend a long time, geeking out on you guys about Skew. But look, Skew is, it's huge by huge right now. If you look at the area chart, this is the highest Skew we've seen in 9 months. Wait, there's more. I'm going to bring up a 3-year. Okay, this is some of the highest Skew we've seen in a really long time. You're in a Skew situation almost as high as about just over a year ago. And I'm going to tell you, this has actually made it really beneficial for some wild trades out there. What's crazy is that, selling premium, okay, can be really beneficial in a heavy skew, especially trades like Christmas trees. If you are bullish right now, you know what a heavy skew can do? Okay, I don't want to bear up on you guys again because I just told you like it's futility with everything that's coming out this next week to try to get bullish or bearish. But I'll give you good trade ideas. And one of the other trade ideas that you could do, back spreads, call ratio back spreads, because the skew is really, really beneficial for them, okay, on the call side. Like you're selling a higher implied volatility, buying a lower implied volatility. On the put side, buying put spreads, okay, when you're actually buying an out of the money put spread or doing some type of Christmas tree, may the skew be with you. That's it for me geeking out on you. All right, last point I want to make here, okay? One of the last points I want to make is FRC. And the reason I'm actually bringing up FRC, there are, again, it's more than rumors, but it looks like they're in receivership. There is no, here we are, an hour plus after the marketplace. I haven't gotten confirmation, but it looks like the FDIC actually stepped in, took them over. So the stock is actually crushed in the after hours, yada, 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 it's over. Okay, who's next? Because when you start to think about, all right, banks, banking issues over here, that's all that really matters at this point, is like literally who is next. And one of the interesting ironies out of this, okay, you want a marketplace that just does not care? Look, KRE, which is actually your regional bank ETF, is actually bid up. That's right, bid up. Okay, it's a marketplace that just just doesn't even shake his head, just keeps right on going. It's a freight train right now, people, and you got to be careful in markets like this, because the implied volatility, and again, strictly my opinion, but the implied volatility, looking at a VIX that's down in the 15 handle, does not match not only some of the risk that's into the future, but the implied volatility to me, okay, doesn't match some of the realized volatility. I'm going to show you one last thing about the implied volatility and cruise over to the spiders here. One thing I want to make you aware of, when I talk about selling options premium, you're like, it's a terrible time to sell options premium, Don. The VIX is low. Okay, short-term volatility, short duration volatility is crushed. All of those zero DTE expiration type traders, they got annihilated. Okay, like 3 times this week. In fact, one of the times this week, the spiders, that on Thursday was a 3. That's right, 3 sigma move against its daily expected move. But the point that I'm trying to make over here is short duration volatility is crushed. Look at some of the back duration. This is the stuff that we're out there selling. This is what Ultima is really about. Do you realize some of the back month volatility is 2021, because they see the debt ceiling issues out here. They see the uncertainty of the Fed. Back month volatility, though, is where it's at, and the skew is absolutely monstrous in some of the back month options over here. Take a look as you go really far out of the money, and you recognize, okay, and I'm actually going to take you down to like some 6 and 7 delta stuff, but you recognize you're selling near 30 vol in the puts. Christmas tree spreads, all of it, it's on the table right now. All right, moving forward over here. I'm just trying to give you a good feel for coming into this next week of trade, what to expect. More volatility. Like, more volatility doesn't necessarily mean like a higher VIX per se, right? We're a very, very efficient marketplace, but again, an expansion of volatility, obviously breaking the range. Okay, our FRC is down and out. Who's possibly next in there? Are we about to go into some more banking issues? There is, again, after this weekend, there could be another run in the regional banks. Watch KRE, of course, into early next week. All right, next on the docket, get your trade on this week's profits and losses. You know what? In terms of allocations, one of the things I did this week, I just covered some calls as the marketplace tanked early in the week. So I had sold calls literally like last Friday. Markets actually sold off heavily earlier this week. I covered some of the calls, but I used much more of the week for opening positions, and nothing too significant, but it will kind of surprise people. Okay, number one on Alibaba. Okay, on Baba. Yeah, I actually placed a bullish position on Baba. Why a bullish position on Baba? If you take a quick glance here, again, I'm into auto expected moves. This is much more of a quantitative tool. We've had 1, 2, 3 weeks, people, below the expected move. I'm looking just for a quick pop back to the upside. Okay. By the way, if you're not into like, expected move, you use like an RSI, a Laguerre. It's a Laguerre polynomial. It's in beyond oversold status there in BABA. So a bullish trade in BABA. Then I've also actually got bullish trades. And again, I did these, I trade now predominantly on Tasty. Okay. But I actually built a number of different positions, okay, in the Catapult portfolios, including a bullish position. Again, I always get, he's a bear. Yeah, bullish position in Microsoft that's in the money. Okay, bullish position in Tesla. I mean, I can go on and on. Look at this. Ironically, a bullish position in Nvidia. All of those trades actually working out extraordinarily well. The bullish position in Tesla is brand new. Also in our Catapult small portfolio, a bullish position in the QQQ just placed. So bullish position left over here in Bank of America. So again, the irony is I actually have more bullish positions on right now. I am absolutely still short markets, and I want people to understand that, but I've taken some nice stabs using Catapults. And for those of you that don't know what the Catapult is, it sells S&P options to finance other trades. So I went out and financed the trade in Tesla. I financed the trade in the QQQs. I financed all of the trade inside of Microsoft. What that basically implies is that I'm not taking, okay, any risk, if you will, in a Microsoft trade. Microsoft is exploding to the upside. I'm part of it, and I didn't actually take any risk inside of that particular spread. If you're more interested, of course, in Catapults, we've got a class on that here at TheoTrade. The Catapult Confessions. It's under the option classes. With that, last thing I want to mention here, as I do each and every week, expected move. Now, I started with this, and I'm definitely going to finish with it. We just had, okay, previous 3 weeks of trade. In the previous 3 weeks of trade, and I'm going to kind of highlight these for you for a second, we did not hit the edge of the expected move. We did not hit the edge of the expected move. We did not hit the edge of the expected move. 3 consecutive weeks. People, doesn't happen often. Okay, it's an anomaly. What do we do in the 4th week? All inside of basically Tuesday, the entire move. Now, this last week, we had about a $62 move being implied. Literally had, okay, over a $60 move down in one day. On Wednesday, obviously, okay, kind of a key day, we reversed back higher. Thursday, explosive move right back to where the week started. And then here on Friday, okay, listlessly higher into the Friday close. Nevertheless, the point that I'm trying to make over here, you have a $62 expected move for an entire week, and you have multitude of days that had over a $60 move. It's again pretty chaotic. Now, this next week, yeah, we're not having a $62 move. We're done with that. We're now moving up here to about plus or minus $72. The thing that actually is crazy to me is this last week of trade where we had a $62 move, really wasn't that much news to come out. There were some big earnings and so forth, but this next week, as I said, you have what? You have Fed, you have ECB, you've got like every report, the employment report, you've got Apple coming out. Oh my! This $72 move, okay? Yeah, this thing is going to get breached. Like hands and feet inside of the vehicle. The upside of this is about 42.40. The downside of it is right at 4,100. That's one of the things I really wanted to point out is that once again, the lower edge of the expected move in the SPX is congruent with about that 4,100 level that we looked at in the S&Ps. So expect this expansion of volatility to kind of continue, and eventually, people, look, you're going to feel it in the VIX. And speaking of the VIX, I'll actually finish up with this. If you're not in a VIX trade right now, you might want to consider it. It is the lowest VIX that we've seen now. Watch this. I can open up like a 3-year chart, and this is the lowest VIX we've seen since literally all the way back. You got to come back to 2021 to see the VIX back down, okay, and spending any time in the 15 region. So, possibly act now over here. Some of the back month VIX trades are getting entertaining at this point in time. Look, that's it for this weekend's update. I want to thank each and every one of you tuning in to TheoTrade throughout the course of the week. Thanks, everybody. Have a great weekend. Bye-bye.